Good afternoon, Vasilis Jurasis for Trader24. Well, the South African market started off on a negative note this morning and remained fairly range bound right up until about just after 3 p.m. local time, where things took a turn for the worse and we saw our market go further into the red. Our all-share index was down 254 points, closing at 34,534. And our top 40 index was also down at 30,518. That was down 246 points for the day. It was also futures closeout on our market. Total volume traded just above 16.3 billion rand, but as has become customary for the last couple of trading sessions when it comes to futures closeouts, pretty uneventful events, nothing to write home about, unfortunately. On our market, commodities were the hardest hit again today. Our resource counter taking a bit of a beating. And I think this was a bit of a follow-through from disappointed investors who expected a more aggressive monetary policy from Bernanke last night. Certainly, the disappointing numbers that came out of the US this afternoon also did not help matters further. South African bonds were also softer in late afternoon trade, and this again was on the back of a slightly weaker South African rand. The last I checked, the rand was trading at 8.34 to the US dollar and 10.48 to the euro. In other local news, South Africa's current account deficit widened to 4.9% of GDP. This was its biggest in more than 3 years and was also larger than expected, or worse than expected. The latest deficit was due to a deterioration in the trade account of the balance of payments, which widened to 42.1 billion in the first quarter from a deficit of 17.1 billion in the previous quarter. It was also interesting to see, and I've mentioned this in previous webcasts as well, the S&P, although it did break and hold the 1340 level, I did mention that, caution should be thrown into the wind. Let's wait and see as to what Bernanke has to say. And should he disappoint investors, we could see the 1340 level breach to the downside. This certainly seems to be the case for the time being. And I stress for the time being. The last time I saw it was trading at 1338. And certainly just keep an eye on that one. If it does close before the 1340 level, it could again just have been a false breakout, and we could the S&P track lower. But if it does improve during the course of the trading day today and close above the 1340, things still remain bullish. Vasilis Jurasis for NakedTrader.com.